Greetings everyone. My name is Manjot Singh Bhatia. My registration number is 23111535, and today my topic for QT CIA 3 is basic profit and loss. So basic profit and loss is that what is profit? A profit is when you sell something at a price more than the price which you procured it. For example, profit is the profit formula is profit is selling price minus cost price. Loss is when cost price is greater than the selling price. So, for example, profit and loss is that I procured this earphones at 200 rupees and I sold it for 300 rupees. So I have a profit of 100 rupees. So if I have a profit for 100 rupees, that means that I procured it at 200, which is less than the selling price. That is what we tell that it is a profit. So what if it is a loss? A loss is when I procured it at 200 and then when I sold it at 150. So I have a 50 rupees loss. Also, profit percentage is taken out by profit divided by cost price into 100. It gives us the profit percentage for that given amount. And profit percentage is calculated, for example, in this PPT which we have shown, is 100 divided by 200, and 200 is equal to 50%. So profit in short is when you sell for more than you paid, and the loss is when you sell for less. Thank you so much.
Good evening everyone, my name is Krishna Gupta and my registration number is 2311528, and today I will be giving you the introduction on profit and loss. Profit and loss are the fundamental concept in finance and business, representing the outcomes of financial activities within a specified period. Profit or gain is the positive financial return achieved when total revenue generated from selling goods or services exceed the total expenses, costs and taxes incurred in producing or delivering them. Loss, on the other hand, occurs when total expenses exceed total revenue. It indicates that the business has spent more than it has earned. Losses can threaten a business viability, signaling the need for adjustment in strategy, cost management, or revenue generation. Thank you.
So this slide is about the basic concepts of profit and loss, and it demonstrates how to calculate profit and loss with the provided example. So first I will be explaining about profit. Profit is the amount when earned when the selling price of an item is higher than the cost price. The formula for calculating profit is SP minus CP. Loss. This occurs when the cost price is basically higher than the selling price. In other words, a loss happens if you sell an item for less than you paid for it. Then we talk about profit and loss percentage. Profit and loss percentage indicates the profit or loss as a percentage of the cost price. It helps to measure the efficiency of the transaction and is calculated based on the difference between SP and CP relative to CP. Okay, so as we derive the example provided in the slide, the cross price given over here is rupees 200. The selling price given over here is rupees 300. So in order to calculate profit, the basic formula for calculating profit is selling price minus cost price, or SP minus CP, which is 300 minus 200, which is equal to 100. Since the selling price is greater than the cost price, this is a profit of 100. Now in order to calculate the profit percentage, the formula is profit upon CP into 100. Now according to this formula, when we put the values according to the formula, the answer would be 100 upon 200 into 100, which is 50%. This means that there is a 50% profit on the cost price. Now if the CP was greater than the SP, then the formula would have been as follows: loss is equal to CP minus SP, where the cost price would have been greater than the selling price, and to calculate the loss percentage, the formula would have been loss upon CP into 100. Now from the summary of this example is, profit is when SP is greater than CP, then it is calculated as SP minus CP. Loss is when CP is greater than SP. It is calculated as CP minus SP. Profit percentage shows the profit as a percentage of the cost price. In this example, selling the item for 300 when the cost price was 200 results in a 50% profit. In simpler terms, profit occurs when you sell for more than what you paid, and loss occurs when you sell for less. Thank you.
Greetings everyone, myself Ishan Sumani. Today I'll be telling you about how to find cost price. So to find cost price, we need to determine the original amount spent or to acquire any produced item before any markup or added profits. We'll be finding cost price by using selling price formula. It's CP into profit 1 plus profit percentage divided by 100. So we have taken an example. Let's assume we have a selling price of rupees 150 and we have a profit percentage of 25%. So cost price formula is basically 1 plus 100 divided by 125 into 150. So our CP comes to rupees 120. Thank you.
I will be explaining mark price and discount price as shown on the slide. Mark price, often known as MP, which is initially set before the discount is applied. Think of it as a label price, which is usually higher than the cost of the item. Now, when we talk about discount price, it is usually the percentage reduction on the mark price. Stores offer discount to basically attract new customers, and it basically reduces the price we actually pay. So in this situation, the formula for calculating the selling price is equal to mark price minus discount. Let us take an example to understand this better. In this question, the mark price of the item is 200 with a discount of 15%. So in order to calculate the selling price, we will take out the 15%, which is 30 rupees in monetary terms. So the discount is rupees 30, and in order to calculate the selling price, we will use the same formula. Selling price is equal to mark price minus discount. So 200 minus 30, which is 170.
Greetings everyone, I am Madhav Jadon, registration number 2311533 of 3BBSC, and in this video I will be explaining how to find the selling price. Before we come to know how to find the selling price, we need to know what selling price is. So selling price is generally that price at which something is being sold. The definition to selling price could be it involves determining product value for the profitability. The formula for calculating selling price is cost price into 1 plus profit percentage upon 100. Over here in the PPT, I have taken an example such that we will understand it more further and better. So the profit percentage over here is 30% and the cost price is 80 rupees. So if we put the values in their designated places, which is selling price is equals to 80 rupees into 1 plus 30% upon 100. If I solve it further, it would be selling price is equals to 80 rupees into 1.3, which comes out to be selling price as 104. With this, we are clear with how to calculate the selling price. Thank you.
So, in conclusion, understanding profit and loss is essential for any business as it provides a clear picture of financial health and also it helps in the decision making. By analyzing the profits and managing the losses effectively, a businesses can strategize for their growth, allocate resources, and also they can improve their overall performance. Our exploration into profit and loss gives us a valuable insights into how companies navigate challenges and achieve success, emphasizing the importance of financial literacy for everyone. Because profit and loss is not for only businesses, but it's also for your normal budgeting, for your normal, financial literacy and normal life, because it helps us in every possible way. And thank you for taking the time to join us in this journey through the fundamentals of profit and loss. We hope that this presentation has given you a deeper understanding of how these concepts shape the financial landscape of businesses. Your attention and interest are greatly appreciated, and we look forward to exploring for more financial insights together in the future. Thank you so much.